Morning, Friday, August 19th, Stan Ehrlich, market commentary. Well, I talked about earlier this week this market being very overbought, and the likelihood of a decline starting was very high. Plus the fact that on the average, the index is not only getting overbought, and I'm talking about the Spider and the DIA and the QQQ and the Russell 2000, the ones that I love to watch, got overbought. There were gaps to close approximately a couple of weeks ago at lower levels. Gaps are almost always closed. They're like a black hole in space. They tend to suck the price action back into them, and we're on the way down this morning. We also bumped against resistance. We also bumped against the 200-day moving average. We also have the October lows coming up, and I have a surprise for you this morning. Toward the end, we're going to show some charts on how reliable that October low really is. The QQQ had a bearish engulfing ER sell signal on the top of the rally, which is exactly what the strategy is built for, and so far so good. That was Tuesday. We have a new low now for the last 5 days, and maybe almost a new, no, not quite, for 6 days, not quite, but a fairly sharp down day this early in the morning, 1 hour after the opening. Looks like we're on our way down. End of the week, Friday, profit taking potentially, variety of excuses, etc., to believe that the market was supposed to have some sort of downside correction. So no particular surprise, but there were so many reasons that you couldn't ignore them. We also had a major bear trend line across the tops of January 5th, 2022 and March 29th, 2022 on the Spider that was right in the same proximity as the 200-day moving average. We bumped against that trend line and stopped also. So if you didn't like the 200-day moving average or the Dow Theorist moving average, then you still had the trend line stopping the rally. So here we are. New lows for the week, near the low of the day, starting to go sideways a little bit, but then again on a very short-term basis, and I do watch 1 minute and 5 minute charts as well as the dailies. We've got a little oversold on this break this morning so far. It's only been an hour. Let's go look at something else. We have a cycle that's not the greatest in the world, but I like the looks of it. I've kept it on the screen for a few days. That has a top, a cycle high in this time frame. And here we are, new lows for the week. The cycle low I picked on purpose slightly after that low we made on June 16th. So the anchor bar or yellow line is at 622 instead of 17. I think that's probably because it's a weekend. The previous cycle high was pretty good. The start of a quick break. Not the highest high for the rally, but still the beginning of a sharp break. Previous cycle low was outstanding. Previous cycle high was outstanding. Cycle low, okay in an uptrend, but no particular low to pick on. High, good. Low, okay. High, great. Low, great. High, okay. And you can see for yourself the rest of these turning points probably would have yielded some sort of profit if you used good, relatively tight money management. That looked okay. That did not look okay. That's probably a loss. And then we have the bottom of the COVID crash to the day. I tried to fit this particular rhythm to that low, of course, and I found that a lot of the other markers, the green and red bars for cycle lows and cycle highs, fit pretty nicely. So I kept it. Next, and that is an 81 trading day cycle that's symmetrical, and these bars are 10%. That's 8 days, 4 days to the left and 4 days to the right of the exact middle of the cycle high or cycle low red-green bar. Next, euro dollars. I love to go to Europe when I get the chance. We have the market coming down almost to par again, 1 for 1, dollar for dollar. We had a buy signal approximately a month ago, one day before the lowest low at the bottom of the cycle. It did produce a heck of a good rally out to about 103, and now we're back down to 1.004 blah blah. The cycle high was a little late, but in the time frame. The cycle low was not particularly good. It didn't work very well at all. That cycle high was a little bit too early. This low was good. That high was good. That low was so-so. That high was pretty good. And that low was so-so. I frankly don't like this rhythm all that much. I'm going to change this and come up with something better for you. So 286, forget it. But bonds, bond futures, 30-year long bond. Here's an example of the ER signals. We caught the exact low day in the bonds on June 16th for a buy signal. There is no ifs, ands, or buts about this. This is a automated 100% entry, exit, etc. trading system. We got a sell signal at the top of this last rally, and we have a new low. Why would the market be going down when interest rates are going down? Well, I'm a technician, not a fundamentalist. We have a buy signal here for about a 1 week rally, and we have a sell signal close to the top of the move months and months ago, December 8th of 21. Actually, that's a year and a half ago. Yeah, this is a daily chart. And crude oil, very much on everybody's mind lately, is attempting to break a support level that it established around 83. And that was because of the low that we made on March 15th. And almost exactly the same on April 11th. So we've come back close to that and bouncing for a couple, 3 days, nothing significant, no reversals, no new highs for any significant amount of time. The point is we have sell signals, automated sell signals, smack dab on the top of the move, June 14th in the crude. Next chart. You're going to like this last one in a moment, the October lows. Hogs. I showed you this a couple of days ago. So this is in progress. Brand new short signal. The rally high the next day, which is when I like to get, one of the methods, I like to get into the trade signal. Did have a rally high, one tick above the actual trigger for a new short at 98.44. We had a high the next day at 98.45. Close enough for government work. Actually, real close. Lastly, you're going to love this, the October lows. This is a weekly chart on the S&P 500. The green cycle low bars are on purpose only covering the October month every year for going back to the fall of 2011. So 11 years. The October low, cycle low green bar is in the future coming up in this October, a couple of months from now, obviously. But the last one was great. Let's just skip the highs. The highs don't count. The highs are not important. I can get rid of them, but I'm not going to bother at the moment. I might screw things up. Two lows, slightly early, slightly late, around October in 2020. 2019, boom, during October. 2018, in October we got a decent rally, but it wasn't the lowest low. Obviously turned out to be the week of, and it's a Friday date on weekly charts, December 28th, the end of the year, for that lowest low there. We have another cycle low that really wasn't a low per se. It was just simply price action in an uptrend, so the market didn't come down. If you bought it during October, you would have made money, but there wasn't a quote-unquote low. The previous year there sure as heck was. That was November 4th, but that's the end of the week. So the low could very well have been early in the week and still in the month of October. So close, but still probably good. It's a weekly chart, remember. Same commentary for the low that was in 2015, just prior to October, or I'm shifting it to the left one mark. There we go. That's good. And bullseye 2015, actually 14. A great one. Also a very good one the previous year on the 13th. Also maybe a week late, but generally speaking around October in 2012. And in 2011, on the very far left bottom corner of your chart, another low. Excuse me, sorry about the cough. So there you have it. There's the October lows and the expectation coming up, and we're overbought, not on a weekly chart, but we're overbought on the dailies during this week, early this week. So lots of good reasons to believe we're going to be coming down for a month or two into approximately, probably, October. And you know I'll be screaming bloody murder when I get the bullish signal in October, which I hope to get. That's great. Thank you for watching. It's been a good week. We're down pretty good. That's what I expected. That's what I forecasted. That's what I wanted. Sideways trading range for the moment. I'm looking for lower levels and significantly lower levels in the months to come. Next month and a half, 2 months. Have a great weekend.